Hi, my name is Fan Yang, your Chief Technical Strategist here at ForexMinute.com. You're watching today's Forex video briefing. It is Tuesday, August the 5th, and we're in the middle of the US session. Today we got better than expected data from both the services sector and the manufacturing sector. ISM non-manufacturing PMI for July came in at 58.7, which is the highest level this year so far. Meanwhile, factory orders in June increased 1.1% to a total of $503.2 billion, which is the highest level for the current series. The US dollar rallied across the board. Let's take a look at the US dollar index, dollar yen, and the euro dollar pairs. The 4-hour US dollar index chart shows a market that was bullish at least since July. It stalled at 81.55 after a non-hawkish FOMC statement and then a less than expected non-farm payroll release on Friday. However, after finding support at 81.20, it remained bullish this week and is now pushing to a new high on the year. It looks like we are ending the second quarter and starting the third quarter on a bright note, exposing the US dollar index to the September 2013 highs, as you can see in this daily chart, around 82.67. The US dollar yen should remind you of the US dollar index, except its recent uptrend did not start at the beginning of July, but rather around the last week in July. It stalled around 103, but found support around 102.35 this week. It is now heading toward the 103 resistance again after the positive US economic data points. A break above 103.10 can open up the 103.75 to 104 highs. And you can see that in the daily chart here, around here. The highs from March and April. Okay, but if the market does not break above 103, okay, let's say these highs from last week stays, then we should watch the 102.75 area. A break below 102.70 can refocus the market towards the 102.35 area, 40 area, and maybe even lower in the mode of consolidation. But if it holds above 102.75, the bullish outlook is maintained. We saw the euro dollar edging lower before the US data points. When it fell below 1.34, it refocused price action toward the 1.3367 low from last week. Okay, the 1.34 level was the central pivot of this brief consolidation range. So a break below that focuses price action to the downside. Now, US dollar strength on the back of strong data is pulling the euro dollar to fresh lows on the year and opening up the 1.3295, 1.33 lows from November 2013. Okay, let's go back to the 4-hour chart. At this point, a break above last week's high of 1.3445 will be needed to signal a bullish correction. Otherwise, the price remains bearish towards 1.33, as we said before. Now, if there's a pullback, you could look for resistance around the 1.34 up to 1.3410 area, and that would maintain a bearish outlook. If it pops up again above that, it's kind of at the crossroad, and only a break above 1.3445, like I said, should give us the consideration of a bullish correction. And that wraps up today's Forex video briefing. Once again, I'm Fan Yang, your Chief Technical Strategist here at ForexMinute.com, wishing you safe and good trading.